Hello. Today's lesson is on internal sources of finance as a business grows. Previously, when you looked at 1.4, we've gone through different sources of finance that business may use to set up. Now we're looking at what they may use as a business expands. So, from your previous knowledge, I want you to match the description of a source of finance with the actual type. So, for example, if you think here that this definition, when a business is allowed to trade with a negative amount of cash in its bank account up to an agreed limit, if you think, and I'm giving you the answer here really, if you think the answer is E, overdraft, then in the section here under the answer, you put down E. So can you have a go with the rest of them, please, and pause the screen to continue with the exercise. Now you have your answers. So look at the answers and the description and make sure that you've got the right answers on your worksheet and see if you make sure that you're happy with every answer there. So then pause the screen while you look at the answers. Now, so today's objectives are the three things that we want to be happy with. We want to be happy with what retained profits are and the advantages and disadvantages, what we mean by selling assets and their advantages and disadvantages, and then for you to complete a case study on what we've just learnt following exam style questions. So, firstly, you've got retained profits. Now, you've got to understand the difference between profit and retained profit. As a name suggests there, this is the profit that they keep within the business. So remember from last year that profits is your sales revenue, what you receive from selling your goods and services, minus all your costs, which can be made up of fixed and variable. So most businesses' key aim is to make a profit. Now, once they've made that profit, not all of it is kept within the business. Some of it is given to the shareholders in the form of dividends, and also as well, businesses have a legal obligation to pay tax, and they pay tax on the profits, which is called corporation tax. So here, what we're looking at is a profit they keep within the business. And the advantage of that is the spare cash that they've got within the business. So they're not having to take out a loan to expand. And the issue with that is that you have to pay interest, or they're not having to sell shares to expand. And potentially when you get more and more shareholders in a limited company business, you're losing control of the business. So it allows you to expand gradually from the success of the business, which is the second point. The business has been generating profits. They're using that profits to continue to grow the business. Now, retained profits is the most common form of what finance that businesses use to expand the business. Now, the problem with using retained profits, and you can stop the video at any time to write down the disadvantages, is that the business may not have a lot of it. They may not have a lot of cash in the business. So you could potentially have cash flow problems, because you may be taking cash out of the business and then suddenly, I mean, we just look at what's happening at the moment with coronavirus, that suddenly businesses may not be generating very high sales, and then they suddenly can have real cash flow problems. So you've got to make sure you don't take too much out. And if you're not if you're just using retained profits, you may not be taking advantage of real growth opportunities for the business. So the business may see that there's an opportunity to expand into a new market or sell and develop their products that they sell to expand and grow the business, but they may not be in a position to do so. So can you please pause the screen so that you can write down the answers? Then also the next one is selling an asset. An asset is anything of value that the business owns. Generally speaking, this tends to be property or land to raise finance, because these assets that you look at more as you study business in the future tend to increase in value, and there's something that you can sell and then someone else is happy to buy. So you could decide, right, I am going to sell some land that I'm not using a great deal and use that to expansion into another area of the business. So the clear advantage it gives you, you've sold it, you get a large lump sum of cash quickly into the business, and it prevents a business from getting into debt, and you're keeping control of the business. So the debt through loan capital, control of the business, again through share capital. So if you can pause that and write down the answers. The disadvantages of using selling your assets, you might need the asset in the future. So if you sell some land, you're a supermarket such as Tesco, you sell some land, then you cannot build a supermarket on that land. So you're reducing your growth opportunities in the future. It could be a business who has a factory who produces goods, and then they're not able to make that build that factory to sell the goods. Also, once you've sold your asset, you may rent back the asset. This is commonly called sale and lease back. So, for instance, you have sold some property to raise some cash. You then use that cash to pay rent on another property. Now that then raises your long-term fixed costs, because instead of having an asset of value that you own, you're now having to rent property or rent land, and all that then pushes up your costs and then potentially reduces your profitability in the future. So if you can pause these PowerPoint here to make sure you've got the answers. Right, so what you are looking at here, and I've given you a case study on Amy's kitchen. Now, what I want you to do without giving away the answer is I want you to answer a 6-mark question and a 9-mark question. Now, when you're answering the 6-mark question there, explain the benefit of the business expanding by selling food in North London. What I would like you to try and do is develop the point by using 6 sentences. So a benefit of selling food in North London could be this allows you to have a larger target audience for your product, and in this case service, and then try and develop that point. What does that lead to? And then carry on and carry on. So what's the benefit of expanding in North London? So in an ideal world, when you've got any 6-mark question, you're trying to develop one point in detail. But with any of this, really what we're looking for 6 sentences for your 6 marks. So if you're struggling to write down 6 develop an argument for this, then write down 2 points, 3 sentences each. So one benefit could be such and such, another benefit could be such and such, and then explain why it's a benefit. Your second question is your typical 9-mark question. They're expanding the business. What is the best source of finance? Again, using the case study. So why is retained profit good? Why is it good in this context? Why is selling the assets good in this context? What clues are there in the case study for you to talk about that? And then your conclusion on the best source of finance. Now, I've put a bracket there on the S's because really, not always, but sometimes an answer isn't one or the other. It isn't using retained profits or selling an asset. In this case, perhaps give you too much of a clue, but it could be a combination of both. So they use retained profits where they can, but because they've got a spare amount of cash, but without potentially getting them into cash flow problems as their business costs increases, but also sell an asset as well. So in this case, it's trying to be clever and write about a combination. Okay, thank you very much. That is the lesson on internal sources of finance as a business expands.